Okay, everyone, thank you for tuning into this session today. So it is 3:30 p.m., 18th of June, 2024. Okay, so it's Tuesday. And what we've had on the dollar is a slight pullback as anticipated. So I'm just going to be looking out for this area to be reached and go from there. On pound yen, we've had another push to the upside, as we can see here. Another push to the upside, and for this to continue bullish, what I'd want to see is a closure above these bodies, or this level of resistance, like so. So a closure above here would be very nice to see the continuation to go long, because that would then show the momentum is to the upside for sure, because we would have a closure rather than just a wick. So we've had 1, 2, 3 wicks so far, pull back into support, and another push to the upside. So just to recap, this is still an area in which I'm looking at if price decides to come back to here, that daily area, okay, which would now be from here to here. So instead of from this high now, it's now to wherever the high decides to print. So that's where it is right now. So it's just a case of waiting and then hoping to see a pullback to get in the buy positions. So GBP USD has had a little pump to the upside as well. With this, however, if we remember, because of that 4-hour leg to the downside, what I would like to see is price to come into premium of this leg, react off of something in here to then go short, to then take it down into there. Because remember, this is an area which I'm really interested in. If we do reach down into here, that is, then I'll be looking for buy positions out of there. But for the time being, I'm just sitting on my hands and waiting for price to come to me rather than chasing. Okay, so that push off of this area, if we go to the daily time frame, we can see what that actually reacted from. It reacted from those bodies right there. We can even move them to there really. Okay, so this was a level of resistance back in to the 15th of May. You can see at the bottom of the screen there, the bottom of the chart, 15th of May. So the close, the open, price breaks through, uses it as support, move away, uses support, move away, comes back very close to the area, moves away. And then this daily candle, so we had a 1, 2 bearish days. This daily candle actually closed on that level, which still shows respect to this level of support. And then we had a bullish candle yesterday. Price has come back down to retest it. However, I wouldn't have liked to have got into the buys. That's hence why I haven't got into the buys, because this right here isn't in any discount for me. It's not in any discount. So whether that be from this low, we've got discount there, look, didn't reach discount, but the low that I'm going from is this low right here. So from that low to the high, obviously the discount is right there. Now I know that we're coming out of this weekly imbalance, that I do know, so that might be why we're having this reaction to the upside. And then we'd need a 1-hour break of structure. The 1-hour break of structure, or the 1-hour structure point, you're probably looking at that really. Obviously at the moment it's just rippled to the upside and not really done much else other than that. Okay. So yeah, that's what I'm looking at. We can leave that on there. We can take it off. I'm going to take it off personally, because the main idea of it, the way I like to do it, is the areas on my chart that you can see are typically areas that I'd want to trade from. Now, I know that I'm using the weekly, the monthly, 12 month to get areas and whatnot, but that's more so for directional purposes and for bias purposes. So for instance, right here, you can see the weekly bodies. We can see that that was wicked into, and then we moved away very nicely off of that. So that's just in the back of my mind that we've done that. If I go to the daily, you can see that isn't there anymore, because technically actually it's that right there, 2 daily bodies, but I already know that that's wicked off of a weekly. So yeah, this is what I'm anticipating, sort of a chain reaction off of that weekly resistance. Let me just bring that back to the daily. And then on the monthly, we've got that as well. So we've got this as well to contend with. We've got monthly, weekly. If we go to the daily, you can see the daily time frame is wicked into these areas. And then we've moved away quite suddenly, quite sharply out of this. So think of this as a very strong ceiling. Price has come down, reacted, and then it broke 4-hour structure. If we go to the 4-hour, you can see that. 4-hour. Let me take these away. Yeah, so 4-hour structure right there. Just to clean this up, what I'm going to do is just type this out on the bottom. 4-hour break, like so. And then as I've said previously, this is the leg to the downside, what I'm looking at. Okay. Got those 4-hour bodies right there that align quite nicely with the 61.8% extension as well, which is quite nice. And also, look at this. We've got these 2 4-hour bodies over here aligned with this 2.5 extension. Okay. So that's literally just from that high down into the low. We've got an area of resistance where we could potentially bump our head at, and hopefully we can catch a nice sell from here. That'll be ideal, because down into here from this daily level, down into that daily level, you're looking at 237 pips. Okay, and the fact that we've got these alignments is quite nice. Sort of an extra confluence if we are going to get into a short position, that we could reach down into here and maybe target these areas. So I'm just going to leave that on there. Okay, I'm going to take that off, because we could just have a reaction from this somehow, pull up, maybe have another retracement to then go short once more. Okay, but it is nice that those align with those arrows. That one down there. So that's GU. Let's look at USD CAD. Okay, so we've continued to sell off to the downside. Now, keeping in mind on the dollar, we've just had that short-term pullback from Friday's high. Obviously, we're Tuesday now, so from Friday's high, Monday, Tuesday, USD CAD. Friday's high was there, look, and then Monday, Tuesday. So, and also we're coming out of this monthly resistance as well, similar to GU. We're coming out of a significant area. This is monthly resistance right there. Weekly, we've got weekly resistance there as well, which we've not reached, but the monthly could be enough to send it to the downside for the time being. We've got this area right here as well, which we can bring across, because that might get used once more. That comes in at 1.36. Psychological number there as well. So daily time frame, I'm just going to make that clear on the daily as well. Just going to put a horizontal line there instead of a ray. Oh, sorry, instead of a trend line. If I go to the daily, you can see that that's where that area lines up. So it is support and resistance, but we're using specific price levels from specific time frames. That's why they're different colors, because they all have different strengths. So monthly resistance coming out of there, look. Price comes in, monthly resistance, move away, monthly resistance, potential move away. These lows could be taken, looking at it in that respect. Okay, but for the time being, we'll have to monitor what the daily time frame does from here. So the current daily candle is looking bearish. So we've had a bearish 3 pin coming out of this monthly resistance on the daily. So that alone could have been an entry. Stop above the high right there. 80 pip stop, something like that, to potentially target down into there. Not the highest risk to reward, but again, depends on what style you like to trade. So the current daily candle is sitting on this support handle. So if we close below on today's candle, so we've got 6 hours and 18 minutes of this candle to close. If we close above it, there is a chance that we could continue to the upside. If we close below it, then there's a chance that we can continue to the downside. So just paying attention to that. This is why the candle formations and the candle closures are very, very important, because it does tell a story. It really does. Oh, sorry. So that's that. You can see I've just outlined the liquidity there as well. If we did decide to pop up to the upside, if we go to the weekly, let's keep in mind that this is a significant level as well. This is a weekly support. Let me just label that as well. Weekly support right there. 10 days left of this monthly candle to close. I'm still favouring this down here. That would be very, very nice. But in order for me to get that idea, then I'd need to, well, I said it in the previous live, I'd need to see, first of all, that low be taken, and then that secondary low right there, and then hopefully we can get a pullback to take it down into there. But until that happens, anything could happen on USD CAD. What we've also done is reacted from this 4 hour imbalance right here. Yeah, 4 hour imbalance. Had a reaction, come back down. It's come back into this daily blue line. Could see a secondary push to the upside off of this. But we're just sort of stuck in a sideways motion right now on USD CAD. Yeah, that's pretty much it. Nothing else to discuss really. As I've said, you know, these are the areas in which I'm looking at to be taken. If I'm going short, this low, then this low. But until then, I'm still bullish on USD CAD, because what we've done as well is we've now achieved a discount of this leg. So from this low to the high, achieved a discount. You can see price aligning with the 61.8% and the daily level. Yeah, so that's very, very nice to see right there. Okay. Yes, that's USD CAD. Let's look at Euro Dollar. So remember, this is the yearly support level, looking like we're reacting from it from a bullish standpoint. This is what we marked on previously. when I was saying about the 4-hour imbalance, we needed to see a 15-minute break. Let's just have a look to see if we did get that. Okay, we got that right there, look, 15-minute. That then became the 15-minute demand. So when price reacts from this is when we need to see a 3-minute break of structure, which we did get right there. At which point this could be the entry. Okay, as soon as price dips back into there, you've got 10 pip, 11 pips. Okay. Be in profit right now. Let's just double check to see if there was a 1-minute entry as well for extra confirmation. So if we just replay the price, there's the closure above there. This is a 3-minute. So now this is for the extra confirmation entry. Okay, which we had right there. At which point that would have been the entry. Although I don't think it came back. No, you would have missed that. Well, it still might come back, but that's the thing with over refining. Sometimes you can over refine in these markets. Okay. Let's go back out to the daily, just to zoom out a minute. Okay, so if this is to continue bullish, this is the next area which we need to basically violate in terms of a candle closure above, and then that high there as well. But first of all, this area, because that's a tweezer bodies. Going to the 4-hour. This also aligns within a premium of this bearish 4-hour leg. So whatever we do here is going to be fairly significant, because we can either react from here to then break that low once more, which I don't think could happen. Obviously it could happen, but you know, we've got the yearly support, so I'd be surprised if that happened, put it that way. Or the other thing that could happen is we just blast straight through there, we close above this, we close above this, and then we can get another pullback hopefully to then look for something in here to then go long again. Okay, that might have been a bit confusing, but those are the scenarios which could happen. So if we just drag the Fibonacci from this high down into the low, we actually have achieved a premium, or the equilibrium of that bearish 4-hour leg. So relating that to the dollar, let's look at the DXY. So the DXY, obviously we've still got that available, so this could push further down, which would push euro dollar further up for the time being. And on this extension down, you can see we've got a 2-5 extension aligning with a 1-hour area. This is a 1-hour demand right there, or an order block, whatever word you want to label it as, with liquidity resting above right there, look. So that's the last bearish candle before the bullish move, and we've got a 2-5 extension aligning with that. So whether that's going to be of any significance or not, we'll have to see. But yeah, let's just see what we do and wait for price to print. Let's look at silver. So the position that I had on, or that I had marked on yesterday, when I said that we'd update, or that I'd update you all on today's live session. So that actually reached the break even and then came back to entry. But now it's had a spring to the upside. Typical, I know. So this was the original position. So let me just break this down. Take this off. This was just a mark up. Okay. So on the daily, got daily imbalance inside a weekly imbalance. Bullish. We've wicked into this weekly body level, the red line right there. If I just go to the weekly, you can see that. Wicked into that as support, as potential support. So because we've got the daily imbalance, what we want to see then is a 30-minute break of structure. Well, we see the 30-minute break structure right there. Price comes into the newly formed 30-minute demand, and then price breaks 4-minute structure. If I go to the 4-minute, you're going to see this over here. Price breaks that 4-minute high. Then we come into this newly created 4-minute demand. Then I waited for a 1-minute break of structure, which is what we had. That was the entry right there. And this high right here was my break-even point, which we reached. You can see that price actually came very close, came back to entry, even close to stop loss, and then went to the break-even point. Obviously that is now break-even, so we move on. So what am I looking at now on this? Well, because we're still within this 30-minute demand, I said to myself, right, because we're still within this area and we've made a new low relative to this low, I want to see another 4-minute break. So what we've seen is this 4-minute break. This then becomes the 4-minute newly created demand. Okay, so let's just replay price. And this is something I'm looking at live with you all. I've not actually looked at this today. So we've created that 4-minute demand. We've just revisited back into it. So we want to see now a 1-minute break of structure. So this is the high to be taken. Price takes that high right there. We close above it. Therefore, this becomes the entry. This entire area right here, this is the 1-minute demand. Stop below here. This is 11.6 pips. Round it to 12, add 1 pip, 13 pips. Give a pip for the spread for the entry. See if we would have been tagged in. Okay, so price tagged us in. Again, this is just markups, but this is something I'm looking at in terms of the way silver moves. It does move very, very nicely. That would be the break-even point right there. And then ultimately, these 4-hour imbalances would still be the target. So that would give us just under a 9-to-1. So let's just see. Let's just press play. Okay, so price is currently here. So similar thing. So we'll come back tomorrow's live session. We'll dissect what happened with this potential setup and go from there. Let's go to the 1 hour, see what this looks like. Let me just make it all visible on the 1 hour. So that would be the entry right there. You got that high there. That could be a take profit as well, just over a 5-to-1. So not bad. but ultimately that could be a target. And then you got that 4-hour one right there as well, just over a 10 to 1. So yeah, that's pretty much it. That wraps this up. Actually, before we do wrap it up, I just want to go over gold quickly, because I know that's broken 15-minute structure. So on gold, if we remember, on gold, we're coming out of this weekly area as well. Okay. On the 4-hour, we've created this 4-hour imbalance after we took out that internal high, pull back, react from this 4-hour imbalance. Therefore, we'd want to see a 15-minute break, which we have done. Okay, which we have done. Just take that back there a minute. Which is this entire zone. Okay, so this is our 15-minute demand that's been created. I can take that off. Okay, this is our 15-minute structure break. This is our 15-minute demand, the newly created demand, the bearish move before the bullish move. Price is now within here now, so we now need to see a 3-minute break of structure. So currently that would be the high right there that needs to be taken. So it could be aligning nicely. The fact that silver looks like it's ready to go, and so does gold if we can get that break of structure. So yeah, we'll come back to this. We'll see what happens. This is live tracking and tracing, which is good to do. Okay, you can even sort of call it forward testing if you like. So where would I be targeting if we do get into longs? That would be first target, 4-hour imbalance, and then that high right there, and then ultimately that high. But we'll cross that bridge if and when we come to it. And to be honest, actually, that high could be a target, and that high right there could maybe be a break-even point. But yeah, that's it. So thank you for watching. Take care, and we'll catch up in tomorrow's live session. So yeah, trade safe as always, and I'll see you in the next one. Thanks, guys.